All right, welcome. Gotta set this up. Welcome everyone. Um, Another week has ended, and man, I think so far it's running really good. This last week didn't take many trades. Took two trades on one day, maybe two, three, four, five trades taken last week. Made about $2,900. Withdrew $1,000 for this week. So I think this is a very good idea. Withdrew $1,000, and so far this account has been running really well. So let me show you this right now. Let's let me show you this right here. Actually, I'm gonna select my camera, having a little bit of a technical issue, and then we're gonna do there we go. Here we are. Yeah, so far we can see right now that the account is comfortable, very comfortably sitting at around $2,900 profit so far this past week. So I think it went really, really well. Looking at the account itself, $15,140, 145. It was at 16,000, so we drew $1,000. And let me show you this right here. For people who are new, right? Let's go to entire history, and slowly but surely it worked out. So look, $5,000 deposit. First withdrawal was $150, right? First withdrawal, $150. Second withdrawal, $175. And look at the lot sizes here as well. The third withdrawal, $200. Fourth withdrawal, $500. Fifth withdrawal, $500. Sixth withdrawal, $1,000, because this week was really good. Then the seventh withdrawal was $500 again, and then we did a $319 withdrawal, and now we did $1,000 withdrawal. So every week I'm doing a withdrawal. This means every week the withdrawal money comes to my account, and then I can use that for my real life bills. Is very, very, very important, right? Been breaking down all these trades doing these breakdowns. Now, so without further ado, we're going to go and start with the first trade that was taken this week. Let's go over here, did a withdrawal here earlier on. So we're going to start from Monday. And the first trade that was taken was I remember these. There were two buys on pound yen tickets. Let's take a look at this right here. So the first buy was taken right here. Moving on to the 1 hour time frame, the 21st. So basically, this was the whole idea about this buy. We were at support, right? Obviously, price was consolidating. This was taken around, before London Open volume, right? Most of the trades were taken at that time. We were consolidating on a 1 hour time frame, and this 1 hour candle was starting to break up. Now, the whole idea was that if we can break above 166,420, there's a very high probability we can continue pushing up towards 166,800, 870. That was the whole idea, that if we can continue moving on there or not. So now, or if we can break below the support 166, 160, 150, then there's a high probability we can potentially continue pushing down to 165, 500, 57 pip range. So all we needed was some confirmations. Now, what happened here? We have the 30-minute candle here closed above this area, and then we had these situations for the left hand side. So I executed this on the 15-minute time frame. So I want you to understand this very, very carefully. There was a resistance to the left hand side, and we wanted price to break above that area. Okay, so we had a 15-minute candle. It not only broke and closed above the previous resistance, but also closed well into rejecting this area to the left hand side. Now, when this 15-minute candle started, this is the first 15-minute candle of the 30-minute candle. When it started, it broke above the high. I took a buy at that point, and my stops were below the previous 15-minute candle, right? So I was in a buy, and my stops were below the previous 15-minute candle. Price went in profits, came back to my entry point. I didn't close half, because from what I've seen now in the past is like whenever you're gonna have high volume in a London session, pre-London, London Open, there's going to be a very, very high probability that price will continue pushing in that direction, right? The only point that I would have closed 50% would have been if one of these 15-minute candles would have closed bearish. If they closed bearish, or if they broke the low of the previous candle, I would have closed 50%. So rules are simple. Did the one rule break, the first rule, break the low? Did we break the low? No. Did we break the low? No. Did we break the low? No. Second rule, did we close bearish? Did we close bearish? No. Did we close bearish? No. We didn't close bearish, so I held on to the trade, and it did continue to push up on the 30-minute time frame, came up to some sort of a rejection to the left hand side, and I was like, okay, you know what, this is the time to just close the trade. So I secured positions. It was a 1.75 lot, made about $285. Perfect. Then almost like an hour after that, there was another opportunity for me to take a trade. This was London Open, and this candle closed bearish right here, and I was like, okay, can this 30-minute candle, once it's respecting the low, the previous candle's low, if we break the high, there's a high probability we can continue pushing up to fill this area to the left hand side. Now, someone may ask, oh, aren't you afraid of this resistance to the left hand side? No, because there's volume. You have to understand, price will not all the time reject zones or reject resistances. It's going to break those zones and it's going to break those resistances, and there's a very high probability for those zones to get broken when there's volume in the market. Now let's break this was actually taken on 15-minute time frame, so I'm going to break this down to 15 minutes right now. Price, like the trend was bullish here, right? Trend was bullish. We come up, we create a resistance, and then we come down to create some sort of support, right? Next candle breaks above the previous candle's high and breaks above this high and stops for 13 14 pip stop loss. We have like a pretty big range. We had like a 40 50 pip range, grabbed about 37 pips out of it, made $447 $49, called it a day. Easy. And when I looked at it, the 30-minute time frame, it was like the same scenario that we've talked about in my previous breakdowns. If you've gone through my previous breakdowns, kind of like the same scenarios. Okay. The third trade, this one 22nd, this was a buy on gold. 22nd November, was it? Yeah, I think this was this one around London Open. Yeah, buy on gold. Now, this was a little bit of a tricky buy. I'm not going to say this was easy buy, but this was based off of the previous trade I took on pound yen. If you look on pound yen here on the 15-minute time frame, you can see we created support, broke above the high, and moved up, right? So that was the whole idea on gold here as well, because this was resistance. Now, I want you to understand this very carefully. We had resistance here, right? Price came down, create support, whatever, moved up, and it formed a new resistance when this candle closed bearish. Now, this resistance is a fresher resistance than the previous resistance, which means this has now made a new high. Then we had the 30-minute candle closing bullish, and now we formed support, right? We formed support. This candle broke the high without making a lower wick. So I was like, okay, you know what? The trend is up. Looking at the 1 hour time frame here as well, the trend is up. We have clean candles till 1752 up over here, right? So what's the probability we can continue to push up? So that's where the buy was executed the buy 22nd, and went to about 22 pip profit, 21 pip profit, and basically closed the trade because we came to some sort of a rejection areas to the left hand side. This was kind of a risky trade. This was very, very risky, but the only reason I took this trade was because I was already up a couple of percentages from the last day, the previous day. So it was a little bit of a risky trade. That's why this trade was taken. But the stops are really nice too, right? So risk was small. You look at this right here. This was like a 7 pip stop, 8 pip stop, not even more than 2%. It was pretty good, amazing, right? Made about $426. Let's move on towards the next one. As you can see, the price broke above in the first 2 minutes, so that's why I would say it's a little risky trade. Now, looking at the fourth trade, this was on the 23rd. This was a sell on gold. This sell on gold was okay. I remember the sell perfectly well because, yeah, I remember the sell. This was after we rallied, we rallied after like during a pre London, and then we continued to move down to correct this whole move. So the only reason the sell was taken, I'm not going to talk about the daily. I'm not going to talk about the 4 hour. I'm only going to talk about the 15-minute. That's all what I'm going to talk about. And I'm going to explain this concept here. So price rallied up, right? Price rallied up. And I'm also going to compare this situation with the pound yen situation, which we had at the same time later on for the New York session. And this week I had 0 losses. So price went up and 15-minute candle closed like a rejection candle. If you don't know rejection candles, difference between rejection candles and wick fills, there's a video on my YouTube, right? So we closed like that. And now I'm thinking, that since we had this impulse move up, the 15-minute candle had no problem creating support. There was just bullish candle, bullish candle, bullish, 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 right? No problem, no sort of issues as it moved up. Now, what's the probability that we can correct this whole move on the 15-minute, which is clean traffic right here on the 30-minute, and it's also very clean move on the 1 hour? What's the probability? I was like, okay, like, you know what? Whatever the probability there is, we're going to take our chances. So executed when this 15-minute candle broke the low of the previous 15-minute candle. As we broke the low, took a sell with a 2 lot. Risk was like almost like, I was making some profits from the week. That's it, nothing major. And the whole idea was for price to continue to push down to correct this move. Now, when this candle moved down, also notice that no 15-minute candle broke the high. If even one 15-minute candle would have broke the high of the previous 15-minute candle, I would have closed my trade, because that would have meant is that maybe we're forming a support to go up. But I've seen this happen before. And let me compare this with the pound yen on the 23rd. And so this is pound yen, right? Notice how pound yen also had clean moves, and then we formed sort of like a problem, and then we moved up, right? So as this candle was coming down during pre-New York, I was like, yeah, you know what? We've had issues over here on pound yen. This is pre-New York, okay? This is after NYC open. This is pre-New York when we do the live streams. So price came down. I was, yeah, I don't think it's going to be a good idea to take a sell because there are problems here on the 15-minute. But on gold over here, there were no problems. So took the sell, no candle broke the high. Once this candle was about to close, you look at the time right here, right? Right here, right? We have 6 minutes left. Once this candle was about to close and it was closing bullish, I was like, okay, you know what? If it's going to close bullish, then there's a high probability we may continue to move up. So it's better to secure the trade right there. Made about $1,180. Amazing, amazing, amazing trade. Amazing outcome. Amazing. I would say like great. Absolutely amazing. Now the next trade, this was a buy on gold the next day. It only took one trade that day, and then we move on to a buy on gold. This buy on gold was also very, very simple. We were basically in an uptrend. We created a high on gold, and we created a low on gold. So we basically, I think this was also mentioned on my Twitter as well, I think so. And next candle basically broke above the high, and there was a range to fill. Basically took a buy at that point, and it was a very, very easy trade. Let's take a look at this on a 30-minute time frame. Yeah, this is a 30-minute right here. 30-minute candle made support. Next candle broke the high. Price moved up. Secured a position. Then I think that was a very good idea to secure positions, because after that, price just continued to move down. So yeah, this was a very simple trade. So the key to this is that I've only been focusing on the same time every day. The same time every day. That's it. Nothing different. Just been waiting for candles to close. Just been waiting for setups like I've talked about this in my last ones as well. Now, listen, everybody, listen up. Okay, this account right now that we're running, this account is at um, 15,000 now. We're at 15,000 now. Wherever this account is going to be by the end of this year, let it be 20,000, let it be 25,000, 30,000, whatever that account is going to be. This account is going to be chopped up in three pieces. Okay, and then we're going to choose clients from Dominion Markets, and three of those clients are going to get to trade this account. If the account is at 30,000, we're going to divide it into 10,000, 10,000, 10,000, and one of those people are going to get that account. You'll be able to trade on it. You'll be able to withdraw profits from it. That's how it's going to work. And I think it's going to be amazing. This has never been done before, a trader giving away his account. But also remember, again, you have to be a live trading client on Dominion Markets, minimum $100, right? So for $100, you can win an account that's like 10,000, 7,000, wherever this account is going to be. You have to be a live traded account, a client on Dominion Markets. The raffle is going to be done on the 1st January 2023. More details are going to come up when we choose the winners. Good luck, or go open an account on Dominion Markets and have a great, great, great weekend.